If you've been watching Opendoor lately, you know it's been nothing short of electric, and Thursday's session just lit the fuse for what could be an explosive move into Friday. The stock closed the day up a staggering 25.6% at $3.04 per share, smashing through the $3 psychological barrier and holding its ground in a way that suggests there's still plenty of gas left in the tank. This wasn't a slow, grinding climb. The rally was decisive. Opendoor ripped early in the session, powered through resistance, and hovered in the $3 range before building on its gains and closing strong. It's the kind of price action that catches the eye not only of traders already in the play, but also those sitting on the sidelines wondering if they're watching the start of something much bigger. After the bell, the stock held fairly steady, dipping just a cent in the aftermarket, a sign that sellers aren't exactly rushing to lock in profits here. That's important, because when you combine this kind of intraday strength with steady aftermarket behavior, it often signals conviction from the bulls. And right now, the bulls are loud and proud. One of the biggest drivers behind Thursday's move was the retail chatter, which has reached a fever pitch. Social media, especially X, is buzzing with Opendoor talk. Anthony Pompliano, one of the most prominent voices in the crypto and investment world, has been engaging his followers by asking them to submit questions for Opendoor's CEO ahead of his interview with her. That interview is set to be recorded Monday and will air Tuesday, meaning we've got several days of speculation and hype leading up to it. And that timing is no accident. By delaying the release, Pompliano is effectively controlling the narrative and keeping the stock in the spotlight. Every day between now and the interview becomes a new opportunity for speculation to grow, for the conversation to evolve, and for more investors to take notice. It's a clever move that maximizes attention, and in a stock that's already volatile, that kind of attention can be rocket fuel. Eric Jackson, another well-known Opendoor bull, has been equally vocal. He's been pushing the long-term potential of the company, highlighting not only the business model but the way this play is gaining traction among investors globally. He's painting a picture of a stock with a massive total addressable market, improving operational efficiency, and the potential for transformative growth. Now, let's talk about what's adding another layer of intrigue here, the crypto connection. Both Jackson and Pompliano have hinted at the possibility of integrating Bitcoin or blockchain into Opendoor's operations. We don't know exactly what that might look like, and realistically, the CEO may take a non-committal stance in the interview. But in the market, perception often moves faster than reality. Even the mere suggestion that Opendoor could weave crypto into its model is enough to attract a wave of speculative retail buying. And here's where it gets interesting, because this is a rare case where two very different asset class audiences collide. On one side, you have the traditional, often conservative real estate investor, who values stability, tangible assets, and predictable cash flow. On the other side, you have the speculative, high-volatility crypto crowd, which thrives on disruptive potential and big, fast moves. If Opendoor can craft a narrative that appeals to both, a balanced approach where crypto elements enhance, rather than overshadow, their core real estate model, they could unlock a broader investor base than ever before. From a macro perspective, there's also a significant tailwind forming. The likelihood of a Federal Reserve rate cut in September has been climbing. Lower rates mean more affordable mortgages, increased housing demand, and potentially faster transaction volumes, all of which could directly benefit Opendoor's core business. The company's iBuyer model is heavily dependent on market liquidity and transaction velocity, and a rate cut could give both a meaningful boost. And then there's the short interest. Right now, a substantial chunk of the float is still held short, with many of those positions deeply underwater after this latest rally. If Friday opens strong and pushes higher, you could see short sellers forced to cover, adding fuel to the fire. Combine that with retail momentum, influencer-driven hype, and the looming catalysts of both the CEO interview and macro rate cuts, and you have the recipe for another leg higher. So, where does this leave us heading into Friday's session? The $3 level, which once looked like a ceiling, is now acting as a potential launch pad. If this area proves resilient during Friday's trade, the next big psychological target is $5, and with the momentum we're seeing, that number isn't out of reach in the near term. In fact, if you get a perfect storm scenario, continued social media buzz, early strength in the trading day, and a few shorts tapping out, you could see that move happen faster than many expect. This is where discipline becomes important for traders. In high-momentum situations like this, it's easy to get caught up in the euphoria. But it's also a time to be strategic, whether that means holding for the next leg, scaling out gradually to lock in profits, or waiting for pullbacks to add. The market is giving strong signals right now, but it's still the market, unpredictable and capable of turning on a dime. For long-term investors, this is also an inflection point worth paying close attention to. The short-term hype is exciting, but the underlying story is starting to align in a way that could have staying power. Operational improvements, a strengthening brand, and a potential macro boost from rate cuts all add substance to the momentum. If the CEO interview next week manages to strike the right tone, embracing innovation like crypto without alienating traditional investors, that could mark a defining moment for the company's narrative. So, heading into Friday, here's what I'm watching closely. First, how the stock behaves around the $3 level during early trade. If it holds, that's a strong sign of support. Second, any continued uptick in social chatter, especially if Pompliano drops more hints about the interview. Third, signs of short covering, big, fast bursts of buying that push the price sharply higher. And finally, broader market sentiment around rate cuts, which could spill over into housing-related plays. Opendoor has been one of the most intriguing momentum stories in the market this week, and Thursday's 25% move just raised the stakes for Friday. With multiple catalysts on the horizon, heavy retail engagement, and the possibility of a short squeeze, we could be looking at the early stages of a move that puts $5 within reach, maybe not immediately, but potentially faster than the market is ready for. Buckle up, Friday could be wild.